And greeting to the traders, you're watching the daily market review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily handling is dedicated as traditional to the technical analysis of forex majors, and let's start our review from the first pair. It will be in technical analysis of intraday analysis of euro and US dollar. So what I have here, the powerful downtrend is on course to extend to 1.2500 and 1.2452 following this week break below 1.2600. Thursday's 22 months low at 1.2515 is expected to give way, and the 1.2452 objective is a downwave equality target projection from the October 2011 lower high at 1.4248. Regaining ground above 1.2620 is required to provide respite, but euro bears will remain dominant while single print resistance at 1.2711 on this week's market profile remains unfilled. Weekly chart of euro and US dollar trend is bearish. Next pair will be intraday analysis of US dollar and Japanese yen, and a recovery towards the week's high at 80.14 is underway. After support emerged at 79.21, however, the May 16 lower high at 80.56 will continue to dominate the daily chart, restricting upside risk. The 79.50 area has become pivotal support for the near term, and only below that would suggest a return to 79.21 is on the cards. Weekly chart of US dollar and Japanese yen trend is bearish. Next pair, intraday analysis of Great Britain pound and US dollar. So a downtrend extension towards to 1.5599 is expected, but following Wednesday's decisive push below 1.5733, Great Britain pound bears appealing pressure on Thursday's low at 1.5640, and there is scope for the 1.55 area and concerted weakness. A recovery above Thursday's high at 1.5726 is required to provide respite, but we can see that Tuesday's bearish outside day and bearish engulfing candle high at 1.5848 highlights the dominant Great Britain pound bear tone, and the weekly chart of Great Britain pound and US dollar trend is bearish. Next pair, intraday analysis of US dollar and Swiss franc. Fresh 2012 highs are being set during Friday session, as the 0.96 level is challenged. A sustained push higher would open a 1.618 Fibonacci extension target at 9696, and longer term US dollar bulls are targeting the 0.9776 and 84. Lower highs from January 2011. Corrective weakness will attract support while above 0.9495, which is protected by 0.9530. Weekly chart of US dollar and Swiss franc trend is bullish. Next pair, intraday analysis of Australian dollar and US dollar. As traditional, our last pair will be for today. So what I have here, continues to consolidate between this week's 6-month low at 0.9690 is projected resistance at 0.9832. However, a downside resolution is expected in the coming sessions. That would generate scope for more Australian dollar weakness towards the November 2011 low at 0.9663, and the projected rising support line of the 10-month bull panic continuation pattern at 0.9640. Regaining ground above 0.9832 would relieve the dominant Australian dollar bear pressure, but only above Tuesday's high at 0.9937 would lift the tone, and the weekly chart of Australian dollar and US dollar trend is bearish. So that's all, my day traders, for today. In studio was financial analyst of Grand Capital Company, Sergey Lin. Thanks you for watching. I wish you the fair trends and good luck and bye.